Jonathan York, Bay Financial Partners, looking at the investment markets. Another pretty big week ahead certainly for US equities. We've got Fed Governor Powell testifying before Congress. It's just going to be very interesting to see if he gives any sort of fresh insight into the Fed's sort of thinking on interest rate policy. From recent comments, it looks like the Fed's sort of certainly on hold now for the next sort of couple of months. Most analysts have sort of projected that out to sort of June at least before we see any further movement in US interest rates. The other big story is obviously the meeting in Vietnam between President Trump and Kim Jong. It's just going to be very interesting to see if actually anything concrete comes out of this meeting. From the first meeting, there was certainly a lot of hype, but really very little sort of concrete sort of news or decisions came out of that. A lot of sort of talking and, we'd like to see this, we'd like to see that, we've agreed this, we've agreed that. But in reality, very little happened. Certainly at the moment, President Trump could do with some good news. Obviously he suffered a little bit of a sort of defeat on his border wall with Mexico, having to invoke that sort of national emergency, which is now going to be challenged in the courts. Potentially as well, some signs in the US, the economy is maybe sort of slowing down just a little bit. And again, it's going to be interesting to see over the next sort of couple of months to see whether those figures were just a little blip or whether it is actually a sort of major slowdown. Certainly the trade talks with China as well have had a pretty major impact on that. Just on those trade talks, it looks like progression is being made as we approach that sort of March deadline. It looks like that's going to be pushed back now. And, as discussed here before, both sides really do want a deal. So it's just when questions sort of coming to some sort of agreement that both parties can be happy with, without appearing to sort of giving in to each other. But certainly if you look at it, global equities have recovered pretty strongly after the sharp sell-off in November and December. Certainly January and February have been pretty encouraging. Now, a lot of that has been helped by earnings. And obviously with the backup in the share prices, those earnings that are coming through, even if they were just, sort of in line, given where the backup in equity prices actually look pretty good. And certainly equity valuations now do look pretty attractive, and that's why we've seen a pretty reasonable recovery. Certainly in the US, the Dow managing to hold above that 26,000, it does sort of look reasonably encouraging for the near term. But so far, the start of 2019 for the first quarter has been reasonably encouraging. Global markets have recovered from the sharp sell-off in the fourth quarter of 2018. And it's just going to be interesting to see if that can be carried through now into the second quarter. On the back of that, oil has obviously recovered a little bit, back above $55. But President Trump is still sort of beating the drum pretty hard to OPEC that prices are still too high. But possibly what he's not taking into consideration is the fact that, with the US a net exporter of oil now, obviously if the prices fall, that is going to hurt US companies and, with a knock-on effect to the US economy. Brexit, potentially a little bit of, sort of interesting news coming through now. There's a lot of talk that Prime Minister May is maybe looking at postponing that sort of hard deadline, seeing if they can get a little bit of an extension there. Rather than having a hard Brexit. Also, as well, quite interesting with some defections from the UK Labour Party, they've now come out and said actually they would be supportive of a second referendum. Now, potentially that could be a game changer. Now, that's quite interesting because if you would have a second referendum now in the UK, I suspect the vote would come out to stay rather than to leave, and we wouldn't be talking about Brexit anymore. The only issue with that is that I don't think there's a sort of mechanism in there. Once Article 50 was triggered, I don't think there is now a reversal of that. So again, that could be sort of pretty interesting going forward if indeed that vote does come to fruition. Here in New Zealand, the much talked about tax working group has released some recommendations. Obviously, top of the list has been the capital gains tax. That's going to be very interesting to see what happens with that. The government has said if they did decide to implement it, and we won't get any clear decisions on that until after April, it wouldn't be implemented until after 2021, and obviously the second term for the Labour government if they do manage to win the next election. On the fixed income side, potentially sort of 2 or 3 potential bonds could be coming to marketplace in the next sort of couple of months. There's just sort of talk that potentially there could be a couple of sort of fresh issues. So just sort of keep that in mind. Interesting though, rates are still going to be relatively low. You're looking around sort of 4% fixed for maybe 5 to 7 year terms. If you look at that historically, that is pretty low for retail investors. Now, obviously, against that backdrop, there are plenty of alternatives out there if you are looking for income. And if you wish to discuss what is available, call us on 0800 867 323 or go to the website www.bayfinancialpartners.co.nz for lots of interesting articles. I'm looking forward to speaking to you soon.